Hello, everyone. Thank you all for joining us for the Small Cap Insights podcast powered by Darrow Associates. My name is Jack Greenberg. I'll be your host for today. We are a leading full-service investor relations firm focused primarily on small cap equities. Joining us on today's episode is Jeffrey Bronchick, principal and founder of Cove Street Capital. Jeff, welcome to the show, and it's great having you. Thanks for coming on.
Thank you for reaching out, Jacko. Happy to help.
So let's start out with some background on your career. How'd you end up founding Cove Street?
I mean, what possessed me to wind up in the dustbin of small cap equity?
Yep.
That the long fall. Oh, it's a long and boring story for young people. First Boston Bankers Trust, Neuberger Berman was really where I kind of got the nose to say doing research independently on things that less people were looking at can lead to outsized risk reward returns. And that really began. I got my CFA. Um, Long story, my girlfriend, now wife of 35 years, said, I'm moving to California with me or not. I halted that train for a bit and to find a job with my newly minted CFA. I got a job at a small firm called Reed Connor Birdwell, or CB, and over I don't know, 20 years, basically Pac-Man way, owned a third of the company and grew it from 200 million to 4 billion. Couple internal things. Firm could not go any farther, and we ended up selling it to a third party. And I was able to spun out 13 years ago to Cove Street Capital, really just to specific on to focus on small and micro cap equity. So that's where we've been running for the last 13 years institutionally. Post COVID, I would say that given the obvious exit of capital, both buy side, sell side, and intentionally expand from small cap, we have been invited to or fallen into, in some cases, abilities to help smaller companies become better and bigger and more investable because of doing this a long time. And, it's not that we're that smart, but some pattern recognition eventually sets in over decades. And so a lot of company skill sets in our world, and IR is one of them, right? To be a successful public company, you don't have to be private. You just have to be thoughtful about an intelligent business plan. You need good management and governance. You need to bring in additional skill sets that maybe are different than the things that got you here. And then you need an intelligent IR program to say, we exist. And, not every company, in fact, very few companies have all those skills. So
Hmm.
that's what we do. We invest in a smaller number of positions where we think we can have material positions and help with said things. Each company's different, might need different help. So that's what we do.
Got it. So we'll touch
Oh
on.
my God, we're in Hermosa Beach, California. I'm the newest Hermosa Beach Chamber of Commerce member, so I should say that, right?
Yeah,
Okay.
I visited the offices. Very beautiful. And we'll touch on some of the management aspects later. But f you mentioned you focused on micro and small caps. Any industries that you guys like to focus on, or agnostic, kind of in that area?
It's a more not, as I've said to you and some of your fellow peers in the industry, like if it doesn't have a zero, if it doesn't have a plus sign on the operating income line, I prefer not to. So we don't tend to do conceptual tech, bio, all us being, we'll look at anything, but prefer, you know, businesses that not a doesn't take a genius to understand or speculate on.
Yeah, that makes sense. And so what do you think some things that companies or management teams tend to overlook kind of in their messaging to potential investors and getting that
It's not
story
even an
across?
overlook. It's sort of, again, particularly in smaller companies, right? There's a certain skill set that gets from A to B, and sometimes they go public or become public through happenstance rather than design. And there's a lot of, hate to use the word, misinformation about what it takes to be a public company and what people want. And the reality is, it's just that simple. We're not like some weird alien species, the shareholders. We're your partners. And so you should be speaking in a very similar tone of, internally, you set a business plan. You should have a board that approves and beats up on that business plan. You should have an incentive plan that matches that business plan. And then you know what you talk to about us? Those things, not other things. And to roll together on like, this is what we're going to do. This is what we're going to attempt to do. This is how we're going to do it. And this is how we'll get paid if you do. And so eventually, you share management will wind up with the shareholders they deserve. And if you just BS us on day one, you're going to get people who want your stock for 11 minutes or really will start to hate you after a while. But if you speak to us as partners, and we all know from experience that sometimes it doesn't work as we thought, or it proved harder, but we're all aligned together. And that's the biggest thing is it's not this weird magic of investor relations. It's how about speaking to us like human beings and we're all in it together.
Yeah, I got you there. And so we know that the market swings quite a bit. How do you balance some of those short-term market pressures with a longer-term conviction or belief in a company?
Well, for in our world, the unicorn is the perfect client.
Hmm.
We still search for the unicorn, but we've got some pretty good small horn ones. Um, so number one, as an investor, frankly, you just have to match your investor time horizon with the strategy. The strategy might look good on paper and you might be buying microcap stocks, but if someone can pull out money every 11 minutes, maybe that doesn't work. Um, the market is a market. It has nothing to do with value. It's the whims, in the short run, it's the whims and issues of our reptilian brains with technology. So we try to establish a cloud of value of where something should be, try to understand the people, try to understand the business model and some of the historical issues that may be worth something in the future. And it's really simple. If we think the stock's worth 20 and whatever nonsense is happening that makes it 13, that's when we'd be buying. If whatever nonsense, company we own that we think is this announces a crypto treasury strategy and the stock goes to 16, well, guess what? Bye-bye. That's far and above our 20. So it's really fiendishly simple. And it works on the same thing on the company side of the business is you got to know your own value as a company. And, just roughly speaking, no one's worth $27.38, but you as running a corporate finance strategy in-house, you need to understand, pretty reasonably we should be worth something in the 20s. Ergo, that dictates, our stock at 50 is a source of financing, or our stock at 15 should be repurchased. So you learn to, you learn not to bother with the nonsense du jour.
No, I think that's a great answer. And final question, just to wrap it up a little bit here. Just a disclaimer, not investment advice whatsoever, but any specific stocks you're excited about in the future or any industries?
You mean your son isn't somebody's compliance years rearing right now?
Not investment advice at all. No recommendations.
No, I mean we're again pretty eclectic. I mean, in a perfect world, you have 25 companies that are in 25 different industries, and that are all equally good prospects and undervalued and have great management, and you're diversified. Sometimes it doesn't work like that. We've been investing in I don't know, the ad business. We like the outdoor space, which is, out front and Clear Channel. I mean, some of the bigger, well, micro, small, this and that. I think that's an interesting area. We've got an influencer marketing company. And again, these sort of sometimes ideas congregate and sometimes they randomly come up through just history or new screening or management change, things that are changing. Um, we do like small cap aerospace and defense because they tend to get, you know, taken up and larger. And we're in the South Bay of Los Angeles. If anyone knows, is you can't spit here without hitting someone from Raytheon, Boeing, or SpaceX. So there's a whole food chain that I won't say we have. I hate to use the word edge, but we're around it a lot. So I think we have a good nose for that. So there's been companies invested in that area, but each day it is in a new and exciting way to lose money. And that's what we try to find. We want to make new and interesting mistakes every day and not repeat the mistakes of the old.
I love that perspective. That's great. And thank you again for coming on the show, Jeff. Really appreciate it. He can be reached at his website, covestreetcapital.com. And wanted to thank you all for joining us for another episode of Small Cap Insights, powered by Darrow Associates. If you enjoyed today's conversation, please visit us at www.darrowir.com. See you all in the next episode, and thanks again, Jeff.
All right. Thanks again, Jack. Have a good day.